Where investing is concerned, stocks and bonds are the most popular assets. We all know them. But what happens when the returns they provide are no longer competitive? Well, this is where the enterprising investor proves himself by seeking yields elsewhere. The question now is, where is elsewhere? Well, that's what we're going to attempt to find out. My name is Anusai Nahulo, and today we'll talk about alternative investments in Nigeria, what they are, where to find them, and how to invest in them. Today on the Market Lens. With me is Daniel Akinwumi. Daniel is a financial markets professional with deep expertise in fixed income trading, portfolio strategy, and data-driven investment analysis. He currently serves as a global market fixed income dealing associate at First Ally, where he oversees billion naira and dollar securities and provides strategic insights on international and domestic markets. When he's not traversing the financial markets, he's playing chess, basketball, and at the forefront of fashion trends. Daniel, welcome to the Market Lens. Let's set the scene, right? A lot of our listeners, they know what stocks are. They know what savings are. They know that they should save. They have some level of knowledge about the bond markets, right? But when it comes to alternative investments, it feels like they're like a bunch of assets that are just thrown together under one umbrella. And it could be a bit tasking to figure it out. So in the most simple terms that you can, think of what are alternative investments or alternative assets.
All right, so like the word itself, alternative, it is not the norm. It is not unconventional, but not the norm. It is another type of investment that is peculiar to certain investors that have an appetite for such investment. It is excluding investments where you receive fixed returns, or they could be fixed returns, but not in conventional assets like bonds, stocks. Those are conventional assets. So alternative assets provide or help investors generate returns rather from investing in securities that are not regular or that are not staple securities.
Okay. So securities or no assets, right, that are not your staple. So in the conventional markets, like maybe the stock market or the bond market. Now you have experience with both domestic and international markets, yes. So the alternative investments, maybe not the definition, but what they are, do they change with the markets? Do they change with location? So alternative investments in Nigeria different from alternative investments in, let's say, other markets?
Yes. So yes, it will vary from location to location because of the regulation around securities. While some countries will regulate or have laws in place for alternative assets, for example, sneakers, you can trade sneakers. That is a pair of sneaker is an alternative asset. Artworks are alternative asset. Wines, there's a market for wines. There's a market for yes, I mentioned shoes already. So not every country has regulation around such assets. That's why it will vary from location to location. Another example will be a catastrophe bond. A catastrophe bond, for example, from the word catastrophe, is linked to countries that are catastrophe prone. So not every country, I don't think Nigeria has any law around catastrophe bonds, but then Brazil does. Some other countries do. So it would definitely vary from region to region.
Okay. So now let's focus on Nigeria. All right. What are some of the popular alternative assets here in Nigeria?
Okay, so in Nigeria, derivatives are popular alternative assets here. Derivatives, options, uh, FX swaps.
Okay, so some of these words sound very complex to me. What are derivatives?
Okay, so like the word is like the word right, like the word sounds derivative. A derivative derives its value from another asset. That's the best way to understand things if you come across any financial term. Just fragment the word and try and understand what they're trying to say. A derivative derives its value from another asset, an underlying asset. That's a derivative. On the other hand, I mentioned an option. An option gives the holder of the option, it's a contract, to either buy or sell an asset at a particular time or on a particular commodity and at a particular price. So that's an option. So think of it an option. It gives you the right, but not the obligation. So you have the option to exercise your right. So think about, okay, I'm trying to draw a reference between the word itself and how you can understand it. So you have an option to exercise the contract or not. That's why it's an option. I choose to exercise this contract. I choose not to. So I'm exercising my options that way. And I mentioned swap. So when you swap cash flows, for example. I could swap a fixed paying interest rate cash flow for a floating interest rate paying cash flow. And you tailor this around your expectations in the interest rate markets. So you measure which direction will be favorable to you, and that direction will determine whether you're going to opt for a fixed paying interest paying cash flow or a floating uh interest paying cash flow. Those are examples of derivative assets in Nigeria. But then I'm I'm thinking I could mention some structured notes. There could be derivative assets when you take an instrument, for example, like a treasury bill, uh, or you take a treasury bill and then you create a product from it based on the cash flow you expect. I think it's called bootstrapping. So you bootstrap the cash flow expected from the security, and then you channel it into another security, and that creates a different security on its own. And you apply some pricing models, and it becomes an alternative asset that way.
So are all alternative assets, like these derivatives that you talked about, does that encompass all types of alternative assets that are available?
No, there are quite a lot of alternative asset. Plants are alternative asset. There's a plant market. If you look at anything, there's a market for it. It's just what country. When like in Nigeria, I have to limit it to things that are conventional in Nigeria. And I've mentioned them derivative options and the rest, FX swaps as well.
But how about things like real estate? Is real estate an alternative asset, or is it, or maybe in Nigeria it has become a bit more stable? Because I know I hear real estate a lot.
Real estate that sector is stable in Nigeria. I don't think it's alternative. I don't think. I think we're very real estate in tuned in Nigeria for us to call it an alternative asset.
Okay, but that's actually something I'm hearing for the first time. All right. How about things like agriculture? Because you have people coming or companies coming to say, okay, if you maybe um invest in or buy this piece of land. There was one I heard of, specifically where you buy land from them, and then with the land comes the like a farming service where you buy the land and then you pay a certain amount, and then they farm for you. They harvest, they sell it, and they just like remit the money to your account. Does that count?
Very. I mean, even while you were describing it, I'm sure you tasted the flavor of unconventionality in it while you were saying it. So that's how you know. Sometimes you can taste it from how you say that it's an alternative asset or not. Yes.
Okay. So okay, it seems like as long as it's not very structured, right? So, but then if it's not very structured, doesn't that come with a lot more risk? Isn't it riskier? Because if it's not structured, then you can't really predict. Because I know earlier you said things like cash flow, right? And that's what people want, right? I want to put my money in something and ideally get more money later on than I put in the first place, right? So if I'm investing in one of these structured assets, right, which is one of the staple assets, then I know that if I put in this amount, maybe at the end of it, like a bond now that just pays like a 10% coupon, right? You know that at the end of it, you get 10%. So these ones, they don't have a structured cash flow system. So is that one thing that people could use as a sort of metric to say, to either, now we know that alternative is anything that is not stocks and bonds, but to kind of, should I say, the measure the degree of alternate, thank you, of alternativeness? Is it something that people could use? And then is there a sort of risk attached to the degree of alternativeness? Is it that the more alternative it is, then the more you should really keep your eyes peeled, and the less alternative it is, then you can trust it a little bit more? Like what's the thinking behind that?
All right, so I would say for you to consider or to have the appetite for an alternative asset, you must also have the risk appetite for that because that is the hub of risk. The hub, I'm not saying the stock market or the bond market do not have an element of risk, is they're very volatile, but alternative assets are volatile, more volatile most times because of the underlying assets. And that is also a metric to measure it being alternative, the risk. Like for example, a cryptocurrency fund. A cryptocurrency fund has a digital asset as the underlying security, but then there are cash flows built around that security. But then what are the metrics or what are the tailwinds or the headwinds on that digital asset? Interest rates, tweets now. I mean, the market has evolved to the point where a few words from a notable holder of a security can determine what direction it goes. So you cannot imagine that your cash flow or the model behind your cash flow would incorporate the tweet from a particular person. So you cannot measure that sometimes. So you create buffers. There's like a swing in your model that determines, oh, I would lose this certain amount of money. I would make this certain amount of money. So alternative assets should come with a measure of value at risk, which is which you can find in some bonds and some equities market. But then that gives you an opportunity to. But in those markets, you can hold on for dear life. But in alternative markets, sometimes when it burns really quick. So that's another way to look at that.
When you're speaking, you said model.
The model, yeah.
So usually when I hear about like things like models in financial markets, it means there's a structure, a framework,
Right.
a way of thinking that is consistent across maybe different scenarios, right? So I'd like to come up with a model for looking at alternatives or for us understanding alternative assets. Are there certain ways that you look at alternative assets where you assess them, where when you see an opportunity, there's a way there are filters you pass it through that determine whether you even give it consideration or not?
Okay, so yes, I think there are things to look out for when you're considering alternative asset. Number one in my opinion is what is your risk appetite? Are you are you willing to lose money? Are you willing to make money? Are you willing to or how do you feel when you lose money? Rather, that's the first thing. How bad do you feel when you lose money? I'm sure everyone likes to make money. So then that is a measure of your risk appetite. When you look at that, you want to look at the underlying asset. What do you know about the underlying asset? How volatile is it? What are the laws that fan it? What are the laws that seek to burn it? Are there more laws that fan it than laws that burn it? If there are more laws that burn it than more laws that fan it, you know that it comes with more risk. Have there been have there been cases around holders of such instruments? What is the regulatory body of or what body? For example, commodities trading. We have the Commodities Trading and Futures Commission. There is that body. What how have cases ended in such situation? Uh then when you look at that, and then you see what other things influence it. What are the direct contributors and the indirect contributors? And then you want to look at interest rates.
When you said how you feel about risk if you're willing to lose money, in my mind I thought, well, nobody's willing to lose money. Right? But then you said something, said, how do you feel when you lose money? Right? Or how badly do you feel when you lose money? And I feel like that's really something to think about, because then it now gives people a metric to really assess how they are, with risk. But another thing you said was the laws. Do the laws fund the assets, or burn the assets? Because unfortunately, the country that we live in, it's where the laws can change. right? You could wake up one day and for a minute, the secular so is there a way, or are there assets that's, or certain types of assets where maybe over time our laws are a bit more friendly, the financial laws are friendly towards, and are there assets that the financial laws are not really friendly? Because earlier you mentioned digital assets, and while in this country we are currently, you know, yes, we're becoming friendlier or warmer to digital assets. We're warming up to. I know there are even like tax laws that have been published for digital assets, right? Are there ways to say okay, or is there a place you can check to say okay, the laws are friendly, the laws are going to fund this asset, and okay, no, the laws are going to burn this asset. Are there places to check, or ways to know beforehand?
Okay, so what comes to mind is places to check. I think you first want to find out how many people how many people have interest in such an asset. And then it's the it's the population percentage that determines if there's a law around it sometimes. It's the more people flock to it, the more the government, their ears stand and they know where to turn towards to create a law around. So when there are less people with interest in such an asset, the- it would I mean it would flourish in some sense because there are few people and there are no regulations around it. So the first test is how many people have interest in such securities. Uh, and then after you find out how many people have, so you want to check if there are laws. So you go to the Securities and Exchange Commission's website, you search for things related to it. If you do not find that, you probably want to check remittances on such securities if there's anything. But I doubt if the SEC does not list any security on its website, I doubt you can find reference to it anywhere else, because when the SEC okays it, then the regulators, and that's when they start to raise their wand and determine whether they're going to vote in favor of it, rather whether they're going to impose certain restrictions on it or not. So you also look at the people, you want to look at the laws, and what else? And the country. Yes, the people, the laws, and the country.
Okay. All right. So look at the laws. How many people, like a litmus test is how many people are into it. So it's kind of like for alternative assets, you don't really want to be a pioneer. So you don't want to be the person who starts the movement. You know, you kind of want to just sit back and see.
And let someone else say the stuff first, and then I would take advantage of what the pioneers missed. If I'm coming into that market, I would study what the pioneers have done and see where they have missed it, because where they have missed it is where I make money from. So where I see that, oh, there's a lacuna in how they consummate transactions here, then I see how to take advantage of that, and then I make money. So if it would take about 5 minutes for that trade to be consummated, I'll make mine in such a way that it could be done in 4 minutes. It might be riskier, but then I gain some traction from there, and I make money from that.
I like that. I like that. You watch what the people that
Watch that.
are doing, and then all right. So let's move on. You said the first test was the what we just talked about, the people, and then you were talking about interest rates, or
Yes, interest rates. Interest rate is the bedrock of money. It's the bedrock of it's the benchmark for borrowing and lending in every country. So you want to know how does how how the movements in interest rates, how does it affect the security I'm holding?
so I'm sorry. So imagine, because I really don't want this idea to run away, so if I want to buy, I want to go into agriculture now. I want to maybe buy land and plant. How does interest rates affect me?
All right, so the farmers that have to take loans to buy supplements, at what rate are they paying their loans? What does their loan cost? Is it high? Is it low? If it's high, then the cost gets passed to you. And then if interest rates are adjusted, if it's lower, it costs them less, and then it's cheaper for you. So then there's the logic of, if you expect, or there's this some market parlance, you expect things to be cheaper, and that's when you want to go short on it. You expect things to be more expensive, and then you go long on it. So that determines what direction you're going to go, and that brings to mind. I mean, say agriculture is like it's broad based. When you think about some crops, for example, and if you think about crops, and now we have crops that are digitized, then we have cocoa that is tradable and so on and so forth. And if you know, the Cocoa Commission has decided to grant a subsidy on a certain supplement used to preserve cocoa to the farmers, you know that it's about to be cheaper, and then it won't cost as much, and you take a position in reaction to that.
Okay, I like that. All right, so risk appetites,
Yeah.
laws,
Yes.
interest rates.
Interest rates. Yes.
All right. Is there anything else, or that's with that you can pretty much start to filter?
Yes, I think when you put your foot on the two, and then it will lead you elsewhere. It will lead you elsewhere.
Yes. How about, because this is one thing that everybody that comes on here says, how about risk reward? Right? Is that something that you should look at, or is that already built into the filters you've mentioned? Because I mean, thinking about it now, I can think, okay, if the laws are going to burn your assets, then it's riskier.
It's riskier, yes. It's riskier, and then there's more reward. There's more reward. So the riskier a market is, the more rewarding it is. Because when there's a major shift in your favor, that is, and you're in the money, it's always better. But then there's a major shift against your position, and then it's burned. You get burned. That's it. But that's where loss. You have stop losses. You manage your risk. You know, if it moves beyond this point, I'm taking this loss so it doesn't get worse. And you don't get too greedy as well, because sometimes you get greedy, you lose all your profits because of greed.
Let's now we'll talk about frameworks, right? I know we've talked a little bit about some alternative assets, but I want to really nail them in the sense of list them one after the other. Now, alternative assets, I once read, I don't know if you know Ray Dalio. Ray Dalio, yeah. He's, the founder of the largest hedge fund in the world. He said there are over 1,000 derivatives and alternative assets in existence, and I couldn't wrap my mind around that, but I just took his word for it. So we're not going to try to list all the alternative assets or derivatives that are available, but can we list the ones that affect the regular Nigerian? Or when I say affect, I mean the ones that the regular Nigerian can really just get into.
In my opinion, everything you look at, everything your eyes can espy, there is a market for it. It's just the number of people that participate in such investments that vary. So for the regular Nigerian, I don't think there's a lot more for them to, there's not much beyond news for them. I think every other thing would spin off the regular ones. So it's like, interestingly, there could be derivatives on a derivative. You want to think about that. So an alternative asset itself becomes, so you're making, I'm trying to break this down. So a derivative itself, you can derive a derivative from a derivative, is what I'm trying to say. So there is, for example, the art market, and then from the art market you create a product, and that's the parent. So there's the parent digital asset, or the parent assets itself, and then there's children from it. So then, but they all link back to the parent, but then there are several children from it. So you can have spin-off from agriculture. There could be products structured around agriculture. They are derivatives. An alternative asset, so there could be derivatives on agricultural products, is what I'm trying to say. So I'm guessing that service providers infuse this under the alternative assets, but his clients that are inquisitive enough, that find out that, oh, this is where the cash flow comes from.
So let's take a staple assets. Let's say a stock that pays dividend, right? And so let's say service provider comes in and they want to create a product that takes the cash flow from that dividend, right? So will that be an alternative asset? So can we now say, okay, if you want to invest in alternative, instead, if you cannot maybe buy, maybe you don't have the money to go into agriculture, you could find a service provider that provides some sort of assets around agriculture.
Yes, yes, you can find that. And interestingly, um, a scenario comes to mind. So when you create a product from the stock that pays dividend, and then something called the prediction market. So contracts are created in the prediction market on that stock, for example. There will be bets on the dividend paying date. So there'll be bets that the dividend will be paid on Monday, for example, or the dividend will be paid on Thursday. And just like that, there's another contract built on that stock itself. And this is what happened in 2008 during the global financial crisis. You heard about the mortgage-backed loans and how there were contracts on almost every contract, and it was a pool of contracts. So that's why when it cascaded, it was very bad.
So it sounds like if you are going into these derivatives, you really have to trust the expertise of, maybe asset management companies.
It's not a service rendered by everyone. It is a service rendered by a focused company that can assure you, give you confidence levels of risk. That is how much you can lose and how much you can make, and how they intend to assuage positions that are not favorable to you. And a word for that would be hedging. When you hedge, you take a similar position against the position you've taken, with the aim to have a net balance of zero, where you lose no money, where you've lost here, but you've made here, and you have zero income, like you're a square, or you make more money here, and in the end, when you absorb the loss, you're still standing.
So it sounds like for um one of the best things that the regular person can do right now, at least in the beginning, when you know dealing with or handling these alternative assets, would be to go to maybe an asset management company or a wealth advisor, and really just talk to them and say, look, I want to get into alternative investments. What are my options?
Third, that's a good question. And then the company lets you know there's a list of alternative assets you can invest in, and this is the value at risk at different confidence levels for each of the assets. And you could also throw in some perks. By investing in this, we pay you probably, if it's in USD, I pay you 25 cents every 6 months for your investment. So that's to encourage you. So you have a sense of an expected cash flow despite the knowledge of risk I might have painted for you. My goal is to calm your fears and to make you understand that in the end you would win with the products I'm offering you.
So it sounds like one of the best things to do is to reach out to certified wealth advisors, just to know the best ways to approach alternative investments. All right, but say I'm stubborn. I don't want to go to a wealth advisor. I want to do it myself. What are some practical steps to get started?
Yourself.
Yes.
Uh, if you want to do it yourself, I mean, the best way to learn is by trying. So set aside what to do yourself.
Also sounds like the most expensive way to do that.
You have to. So you have to. So in my opinion, a loss is the school fees you pay for learning. So that's the fee. A loss is the fee you pay for learning, and that's why your losses reduce over time compared to your first loss. They reduce over time because you learned a lesson. So you want to set aside some money. You've saved some money with the knowledge that I won't be hurt if I lose this money. And then you set it aside, and then you want to trade alternative assets. I'm considering foreign markets now. Uh you want to gain exposure to all the indexes. A stock index list, for example, all the stocks available in a particular country for purchase or sale.
But isn't that still equities? Isn't that still a staple?
Yeah, but then I'm talking about an ETF, an exchange traded fund. So you invest in ETFs. ETFs are a basket of everything. So some ETFs have stocks, they have bonds, they have derivatives, they have a ton of other things. They have some some have artwork, some have wine, some have plants, some have marble. Marble trades a lot too. Marble, timber, all these things, livestock. Some ETFs are very broad. So you want to invest, you want exposure to everything at the same time. So you invest in an ETF. Or then on the flip side, you could set up an account on on this trading platforms online. I don't want to mention them.
Oh, no.
Good. So you could set up uh an account on the trading platform online, and then you start trading with the little amount you have, but you need some knowledge of what you're about to do. And I always recommend speak to someone you know or go to YouTube. YouTube is a repository of knowledge. I remember we were discussing earlier, I talked about how I learned how to code a bit from YouTube. So you can go to YouTube and learn things from YouTube, and you take lessons. But then over time you learn. It's impossible for you to take such lessons, implement them, and not learn something. It's impossible. Whoever doesn't experience some form of progress is probably doing it wrong. You will learn that way. So, and that's the foreign markets. In local markets, what you should do is, I advise you speak to someone that can advise you. You could download apps of companies that give you exposure to certain markets, and then on their app, you have you have a s- you start taking positions. You fund your account. You start taking positions, but not heavy. You go in with little amounts, and over time you grow.
Okay, so start small.
Start small. I mean, the discipline from starting small is a person that waits for 2 years to buy 2 million worth of Nigerian treasury bills, and a person that buys 10K worth of treasury bills every week. They do not have the same mileage in terms of investment discipline. You're waiting 2 years. I do 10K every week. You might have invested more, but then there's a discipline I built from doing that every week. It's different. It's not the same thing.
So start small, build discipline.
Build discipline over time.
But how about things like diversifying? Do they come in, when looking at alternative investments? And so even if you now say you want to diversify alternative investments, how does that work?
Okay, so before you diversify, how much knowledge of the area or how much knowledge of the sector you're playing in do you have before you diversify? Are you diversifying because you're not making headway in the current sector, or you're diversifying because you've made so much headway and doors have opened for you to diversify? You don't diversify until you have a knowledge of a particular market. And the financial market is a domino. When it's in the same way as with knowledge, you can you might not have you might not have the handle of a particular market, but then the key you used in opening the door of a previous market might fit in, but it might not turn. It might not turn that door open, but it would fit in. That's the knowledge you gain from that. You can apply it there, and it gives you some advantage because you have knowledge of a particular market. So then you bring that knowledge, then you can start diversifying. But before you diversify, gain some mastery best. Some mastery, maybe lowercase m, not uppercase m, just lowercase m mastery of a market, then you can diversify. Because people diversify because they think they hear of people generating returns, but then they're not patient enough. They want to make such returns like, I'm going to diversify. So you put your money elsewhere. Or some people think that's the only way to make money. Gain mastery of this market first, go to another market, gain some mastery, go to another market. And that way you become a virtuoso because you have knowledge of all markets in the end.
So let's kind of just, you know, wrap this up into a nice little gift for our audience, right? What is your outlook for alternative investments in Nigeria? Are there certain alternative assets or areas where you feel might grow maybe over the next year or 2 years, where people could look to or just keep an eye on, just in case they see any opportunities?
In our markets currently, I'm thinking what sector seems on tap. Hmm. I think the options market. I mean, and we have something called the bond futures markets in Nigeria. The bond futures market. It's not a sector that has gained so much traction. So it is, when you come to the futures market, I hate to break it to people. It is your data versus my data. It is a very competitive market. I'm saying prices will rise. You're telling me prices will fall. And our contract means shake hands. Let's see who wins. That's what it means. And whoever loses pays the difference on the notional amount, and then I win. So I think the bond futures markets is an area that seems untapped for now, and it should perform better over time when price movement in our local bonds market becomes above shallow, not shallow, above shallow. It is not sharp, but it is not shallow. So that gives room for it gives room for for yes, for opportunities. So the bonds futures markets is untapped. It's an area that we could take advantage of. Uh Aside from that, I'm guessing over time, I think the agricultural sector itself will pose some competition. Some competition. I beg your pardon, some competition. And it will it would be to Nigeria's interest if that sector were to put on its shoes and stand taller than other sectors, because it's where we rely on, or where we should rely on, and it is where our strengths lie, and it's what distinguish us from other sectors.
Yeah, I think I am also pretty bullish on agriculture. In Nigeria, even export data shows that, our exports to total trade has been rising, at least over the last 2 years, which is a good thing. So it means we're beginning to export a lot more. I mean, so far it's mainly mineral resources, which we shouldn't, but hopefully we begin to see more of that, in the market. So maybe just agriculture is something that people could look into. Okay, that's really cool. So now, actionable advice, right? For beginners, right? I've listened to this podcast. What is the exact next step that I should take?
The exact next step is to start saving. You need to start saving. If you wait till you have too much to start saving, you probably won't save at all. I mean, just start. Take some money out. As a child, I used to put money in polo. My mom says I would straighten out my cash, and and I remember when I bought my first FM radio, it was 60 naira, and I bought my first FM radio. So then I started saving from then. So you need to start saving, no matter what it is, and don't think about the size of what you're buying. Think about the discipline. Just invest. It's small, just invest. And over time, you build that drive to invest. Like, always put money away. Always put money away, and leave on less. Put money away and invest. So take some money out, to whoever's listening to me. Take some money out and try and invest in something. Speak to someone that you can trust, uh, and and then ask them what options are available for you. Don't look at the return at the moment. Just, you're building the discipline, put the money away, and then I'm sure when you act that way, there'll be a day where you're like, oh, I have this money somewhere, and you start feeling confident about that, and it gives a sense of responsibility. And if your psyche is tuned that way, y- then your thoughts now line up in that direction. But if your thoughts are incubatory, you're waiting for this to do that. If you look at the weather, you will not sail. If you look at the weather, you will not plant. You need to go ahead nonetheless, and that is how you learn. We have to learn by trying. So put some money aside, and take a step. Just take a step.
Thank you so much, Daniel, for being here on the show and sharing your expertise with us. And there you have it, guys. Alternative assets in Nigeria. There is a market for them, but it can get pretty complex. And you shouldn't, don't try to do it alone. Speak to people, speak to wealth advisors. At the same time, build mastery. Don't rush into it. Start small. Ensure you know what assets can thrive in the country you live in, which is Nigeria. And then start one after the other, and then hopefully over time, you'll build expertise and you will build your wealth. And that's all for our show today. Thank you for listening. Talk to us on social media, comment, tell us what you think about alternative assets. We'd love to hear from you. And as always, stay safe in the markets.